All right, it's Tuesday, time for Valhalla Mortgages vlog. So we're going to go over some of the U.S. data that came in today, which further solidifies the Fed cutting interest rates on the 10th. More than likely, the Bank of Canada will match that. First things first, we have core retail sales rose by 0.3%, which came in at the estimates, but the previous month was 0.6% of an increase. So core retail sales are down. We also have some updated payroll data in the US. US private payrolls fell by an average of 13,500 per week. So this is a big sharp increase of the 2,500 per week it was previously. So the labor market is showing a lot more weakness, which is going to, of course, make the Federal Reserve cut interest rates, even though they're not exactly at their inflation targets. And speaking of inflation data, we got the producer price index in for the US, which is the PPI, and that came in above expectations at 2.7%. It was supposed to come in at 2.6. Now that's the headline. The core inflation actually came better than expected at 2.6 when it was expected to come in at 2.7. With all the labor data, we are now getting to a point where the labor market data is outshining the risk of inflation. And because of all that labor market data, we are now at almost an 85% chance of the Federal Reserve cutting interest rates on the 10th. Now, the Bank of Canada also has a meeting on the 10th. What will they do? I would probably base case another quarter point from the Bank of Canada. Our economy is also in terrible shape. Now, of course, you can argue that the CPI numbers are not even real. You can call it the CPI if you want. But based on the data that we have, it looks pretty bad. And with the US data, they're not actually releasing all the US data. They're avoiding a lot of the October data, more than likely because it is god awful and the administration in charge doesn't want to show you how bad that data is. So they're holding on to it. So there is information out there that you're not getting, but the central bankers are going to be getting. So if I had to take a guess, I would say December will be another cut. That'll bring the overnight lending rate down to 2% in Canada. And of course, pretty much the Federal Reserve is cutting 0.25% as well.